The trade desk recently announced a TV operating system that it's been working on for 3 years that it will launch in the second half of 2025. This can possibly compete with Roku, with which the trade desk has had a strong relationship over the years. So that raises an interesting question for stock market investors. Which one is the better stock to buy for 2025 and beyond? The Trade Desk or Roku? I'll look at these two businesses, evaluate them on several critical financial metrics, including revenue, operating margin, cash flow, return on invested capital, and valuation to determine which one I think is the better growth stock to buy for 2025 and beyond. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with revenue growth, we noticed that each of these companies has been growing revenue nicely over the last 6 or 7 years or so that we have data. And you can see the trade desk jumping to $2.3 billion in revenue and Roku jumping to $3.9 billion in revenue. The trade desk operates in the connected TV landscape as well as Roku. The trade desk operates in the advertising ad buying market overall and is more of a asset-light business than Roku, which is getting more and more into the hardware space. Now, in the recent announcement where the trade desk said they were launching their own operating system for televisions, they specifically stated that they're not going to get into the hardware. So they're not going to get into the manufacture of TVs, or devices that connect to TVs like Roku does, but they are going to launch an operating system. And that conflicts directly with Roku because Roku's operating system is the primary source of revenue and profit for Roku overall. Roku does have their hardware, like the devices that connect to TVs to give you access to the operating system. But those devices are only a small part of the overall business. And the main point of those devices is to get people into the operating system where the company generates most of its profitability. The hardware, Roku's willing to sell at a loss just to get you connected to the operating system. So a different approach here from the trade desk compared to Roku, but Roku has already found great success here. Roku's the number one TV operating system in the US, in Canada, in Mexico, and seemingly everywhere it enters, it quickly becomes the best operating system. Now, I've used several operating systems for TVs, as I'm sure you have as well, and I don't know if you'll agree with me, but in my opinion, Roku's operating system is so much better than all of the other operating systems for TVs I've tried. And so it doesn't surprise me to see that they are the number one rated operating system in the US, Canada, and Mexico. Their operating system works really well. So the trade desk is going to enter a landscape where Roku really dominates. And it'll be interesting to see if manufacturers are willing to partner with the trade desk instead of partnering with Roku. It'll be really interesting to see because that's a prime selling point for TVs. If a TV is branded as a Roku TV, that makes a customer more likely to buy that TV because they're comfortable and they like the Roku operating system. Can you get that same level of trust and reputation with the trade desk operating system? That remains to be seen. Now, when you compare these two on operating profit margin, you see a similar story where they had been in decline, and in recent quarters, they reversed those trends and they're now improving. The trade desk's operating profit margin had been declining for years, and then in late 2022, they started to improve. And this is similar with many tech companies that I've been following. Remember in late 2022, what happened? The Federal Reserve, the central bank in the United States, as well as other central banks around the world, started raising interest rates on the back of rising inflation. And so as interest rates increased, the cost of capital increased, and companies that were losing money on the bottom line, they were facing bigger costs of capital to fund those losses. And so investors were less willing to tolerate those losses at higher interest rates. So companies like the Trade Desk and Roku took steps to improve profitability. And those steps are working. And you can see that here, Trade Desk improving significantly to 16.29% operating profit margin. Excellent improvement here. And Roku still negative, but also demonstrating great improvement at negative 7.27%. Cash flow from operations, you'll notice more volatility from these two. And the big difference here is stock-based compensation, which Trade Desk and Roku use significantly. Still, the Trade Desk has much better operating cash flow to sales, and you can see that 27.33% compared to Roku's 3.98% in cash flow from operations to sales. Now, Roku's cash flow from operations will, and profit margins to some extent, will not have the same potential as the Trade Desk because of the hardware component to its business. If you're dealing with hardware, if you're manufacturing, if you're selling products instead of just services, instead of just digital, then your profit margins have lower potential because there is that cost of goods sold associated with all of that hardware, whereas the Trade Desk doesn't have to work with that. So their business model, more asset light, as I mentioned. And so there's pros and cons to that. One of the pros is that you can generate better profit margins if you have that asset light business model. One of the cons is that it makes it more difficult to sustain a competitive advantage without those asset intensive areas of the business. When you're asset light, it usually means that the proprietary know-how is your primary source of competitive advantage. And that may or may not create barriers of entry. But when you've invested significant sums of money to your manufacturing, into your manufacturing processes, your logistics, everything associated with hardware, that's a more sustainable competitive advantage. It creates a higher barrier to entry for anyone else looking to enter the industry. Comparing the two on return on invested capital, the Trade Desk leads again with 13.38% compared to negative 7.27% for Roku, although Roku is improving as well. And finally, when we look at valuation, the Trade Desk is trading at a price to free cash flow of 129, whereas Roku is trading at a price to free cash flow of 72. Now, I do believe the Trade Desk is the better business here. However, I don't think it justifies a valuation premium of this magnitude. A little bit more expensive than Roku, I would understand, but trading at a forward PE of 130 compared to 72, I think that premium is a little bit too high. And so if I was to pick between these two growth stocks, I would pick Roku as the better growth stock to buy compared to the Trade Desk. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.